Okay, good afternoon, everyone. Actually, I quite liked Jamie's approach of singling out people in the audience who are better equipped than I to answer any tricky questions at the end of the session. So in that spirit, I'll single out David Trebek up the back there, who's a GrainCorp director and has been involved with our company and our industry over many years and is definitely much better equipped than I to answer your tricky questions at the end. Thank you, David. Look, very appreciative of the opportunity to attend today, and I thought what we might do is start by asking you to cast your minds 40 years forward and think about the ABARES Outlook Conference of 2052. Around that time, of course, the world's population will probably be at its peak of over 9 billion people. And I think there are a couple of different scenarios under which the conference could be taking place. First of all, the winning scenario, where our agricultural sector has really maintained its competitive edge and fully participated in this once-in-a-generation uplift that we have from the rising demand for food that's occurring. Australian agriculture will be booming, and there will be several leading international Australian agribusinesses competing on the world stage. And then there's the other scenario, the ugly scenario, where we actually missed the agricultural opportunity of a generation. We sat expectantly, waiting for the rewards to fall into our lap, and then watched as more ambitious, efficient and competitive agricultural competitors snatched it away from us. If we come back to the conference today, I think if we're to collectively achieve one thing, it must be to make sure that Australian agriculture lands in the winning scenario. From a grains industry perspective, that's very important. As you can see from the chart I've got on the screen there, grain generates almost $6 billion in export earnings. That's about a quarter of our agricultural exports and 7% of our non-mining exports. In addition, of course, grain generates over $6 billion in domestic value added from grain processing activities such as flour, malt, edible oils and animal feeds. Today, I want to explore the enormous scale of the opportunity that lies before us as the world moves to feed its growing population, and I'll then outline some of the barriers that could prevent us from adequately capitalising on this opportunity. However, before I do that, let me just give you a quick introduction to GrainCorp. Our business has grown from its 1916 origins as the New South Wales Grain Elevators Board to become an integrated international agribusiness that operates along all stages of the grain chain, as we've depicted on this chart. Today, we're Australia's largest listed agribusiness, and we handle around about 30% of Australian grain and process around about 10%. We've got operations in Australia, Europe, North America, and we serve customers in many other regions of the world. Our storage and logistics business, our grain storage and logistics business, serves over 10,000 Australian grain growers through a network of 280 silos. We connect Australian growers to domestic and international consumers of grain via our 7 ports that last year exported over 8 million tonnes of Australian grain. We have 2 downstream grain processing businesses that pull grain through the network and give us insight into global grain markets. We're now the world's 4th largest maltster, providing malt barley to many of the world's best known brewers and distillers. We're also the largest producer of flour for human consumption in Australia through our Allied Mills joint venture with Cargill. Linking the upstream and the downstream business is our marketing business, and that's aimed at capturing value right along the chain. This business services over 100 buyers and trades about 3 or 4 million tonnes annually, half of which is export. So, going back to the opportunity that I mentioned earlier, let me describe why I think we're on the brink of a global food revolution. In 2050, the world, as you can see on the left-hand side there, will have about an additional 2.7 billion mouths to feed, which is a big increase in the global appetite. However, what's less understood, I think, is that the really good news for Australian agriculture, and particularly for the grain industry, is how this population growth will translate into a much larger increase in grain trade and exports. So As the chart shows, population growth there of around about 40%. What we'll see is over the same period, the global demand for grain will increase by over 50%, we estimate. And on the right-hand side there, the international trade of grain will effectively double. Because there's a couple of multiplier effects in this that supercharge the growth in trade of grain. Firstly, we've got the effect of the increased demand for protein in the developing countries where population growth is occurring. And for grain, this is of course significant because to produce a tonne of meat or eggs or milk takes, anywhere from 1 to 4 kilograms of grain per kilogram of output. Also, we've got the effect of rice being substituted for wheat in many of these regions by the equivalent of 15% or 13 kilograms per person per year, we estimate. And then the other factor that creates the multiplier is that a lot of the demand growth is coming from regions that are already and will continue to be highly import dependent. They can't produce their own grain. So for Australia, as a major producer and exporter of wheat and barley, this growth presents a significant opportunity. Our history and climate mean we've got a comparative advantage in grain. Over the past 40 years, we've doubled grain production through both an increased cropping area and increased yield productivity. And our geographic location gives us an advantage in servicing the growth markets. We've got a freight cost advantage that we would estimate is worth between $5 and $15 a tonne into these markets. And I think the other important thing is that unlike a lot of other industries in Australia, we've got plenty of capacity in our storage and port network to handle increased export grain volumes. We have an average Australian export task of around about 20 million tonnes, which compares to the export capacity of Australian ports of 40 million tonnes. But notwithstanding this fairly fortunate set of circumstances, we are going to have to work hard to capture the upside, because there's a race to feed the world that's well and truly underway. And at this very moment, our strongest and most ambitious competitors are having the very same discussion as us about how they can win this race. So, as you can see here, we down the bottom of Australia are just one player in a very highly competitive and sophisticated global grain market, which is dominated by large multinational companies with flexible supply chains that span continents, including Australia. None of these multinationals are sentimental about the Australian grain industry at all, and if there's a cheaper or more efficient way to get grain to the developing markets, they'll take it. For example, the Black Sea ports, which Jamie pointed out, are aggressively seeking to increase their grain market share, and they're making significant inroads. Meanwhile, we've got the situation where there are some quite concerning findings in a recent Grain Growers Limited report, highlighting customer perceptions of variable wheat quality, delays and lack of support from the Australian grain industry since the removal of the single wheat desk. To compete in the race to feed the world, Australia needs to act now to remove all the lead from our saddlebags. And this means that we need to make sure our export supply chain is as flexible and efficient as possible, or we will reduce our reliability and erode that thin freight advantage I mentioned earlier. If you think about the average tonne of wheat that leaves Australia, about $75 is made up of supply chain costs like storage, rail or truck transport and port costs. It doesn't take much additional cost to wipe out that slender freight advantage of $5 to $15 that I described earlier, and thereby render our Australian growers less able to compete. Over the past 3 decades, Australian policymakers have displayed courage to open up the Australian economy and reduce the burden of regulation. Reforms such as the removal of tariff barriers, statutory marketing authorities and the removal of the single wheat desk were politically very difficult. However, they give us a very strong foundation and set us up to succeed as a country. So now is not the time to take the foot off the gas. There do remain considerable inefficiencies that are placing Australian domiciled businesses at a disadvantage in competing with the global giants of agriculture. As a country, we should ask ourselves, do we want to see Australian agribusinesses compete on the world stage, or are we happy to let the benefits accrue to the dominant offshore players? Australian mining companies position themselves to ride the current wave of development, and we boast two global benchmark companies in BHP and Rio Tinto that deliver substantial returns to Australian governments, investors and employees. In the dairy sector, New Zealand has Fonterra, which is a global leader and plays a similar role.